So thank you everyone for joining us. This is a session about current trends in M&A and investments. I'm very excited to be here with you. We've got a very large number of participants, which is exciting to see. My name is Lloyd Rothenberg. I run the capital markets and corporate practice at Loeb and Loeb in New York. My entire practice is focused on the private company side. I represent both startup companies, venture funds, private equity, portfolio companies, both in Israel and in the United States. I am involved in strategic M&A, joint ventures, day-to-day representation, and the theme for most of my clients is technology, industrial tech, and media. What I'm going to ask each of the panelists to do is to please introduce themselves to everyone in the audience, and also to share a current project or an initiative that they are working on and that they're particularly excited about. And Gina, if I could ask you to please start, that would be terrific.
Sure, great. Thanks a lot. Thanks for the invitation. My name is Gina Domanig. I'm the managing partner of Emerald Technology Ventures. We started up back in 2000, so 20 years in the business, focused on clean tech, which some people are now calling climate tech, but in the end, it's industrial tech innovation. And we have invested traditionally in North America, Europe, and Israel, and expanding now into Asia as well. So we've got about 20 or 30 people in our team, over 3 offices in Toronto, Zurich, and Singapore. And we actively manage now about 400 million on the VC side. All of that is from corporate investors, and about 400 million on the debt guarantee side for a small and medium-sized enterprise solving climate challenges, if you'd like. And to your question about what is exciting that we're working on, I think our latest initiative is we're launching a sustainable packaging fund. So lots of interest from throughout the value chain on sustainable packaging. Happy to talk about that later as well.
Terrific, thank you. JC, could I ask you to chime in next?
Sure. Shalom Chaverim, Hashem Shali Yonatan, or in English, everybody just calls me JC. Thanks for having us today. I know it's a really important day in Israel. Glad to be invited to the event today. I'm an investment director at the Samsung Catalyst Fund. We're a $500 million evergreen strategic fund that invests on behalf of Samsung, of course. And we're very core tech focused, which I think is very relevant for the Israeli entrepreneurial audience. We've invested broadly on everything from IoT to digital health, and the initiative that I like to talk about that it really excites me going into 2021 is the work we've done around cloud infrastructure. So we like to think about new architectures for compute, things like new interconnect, and things like new high-speed data fabrics and networking technologies. I'm sure many in the audience are touching those areas in terms of building very interesting startups. We'd love to talk to you about that. And in these 3 areas, you know, we've done things like invested in the likes of GraphCore and Samba Nova, and also Habana Systems, an Israeli company which exited very nicely. We seeded recently a company called Avicenna that's a new type of interconnect. And we've invested in a company called Fungible, which is done by the founder of Juniper Networks. So that's Lloyd in the audience. That's you know, that's the main initiative that I'm really thinking about now, and you know, for the rest of 2021 and ongoing.
Terrific, thank you. Adam, if I could ask you to share some thoughts, please.
Thank you. So a pleasure to join the panel. Thanks for moderating it, Lloyd. And so my name is Adam Kostyal. I head up our listing franchise for Nasdaq out of for the EMEA region. I'm based out of Stockholm actually, because we own and operate 7 Nordic exchanges: Copenhagen, Stockholm, Helsinki, the Baltics, and Iceland. But a large part of my time I spend with European companies looking to list or do a list in the US. So Israel being a key market for us. From that perspective, we are proud to have many prominent Israeli companies listed with us on Nasdaq in the US. In terms of projects, from my perspective, well, of course, no one's missed the SPAC frenzy. It's now coming to Europe. We just launched the framework for our Nordic exchanges from a SPAC perspective. Very interesting to see the reception and the differences here in Europe. And we're about to list our first Nordic SPAC in Stockholm this week. So again, an interesting project, an interesting change of times in terms of accessing the markets.
Great.
Thank you.
Thank you, David. Last but not least.
Hey, thanks, Lloyd. Glad to be here with everyone today. My name is David Cohen. I'm one of the founders and chairman at Techstars, which we describe as the worldwide network that helps entrepreneurs succeed. We are high velocity, very early stage investors, perhaps one of the most prolific velocity investors in the world, with about 500 new investments annually each year right now, and still growing that aggressively. We do that through our accelerator platform. If you've heard the word accelerator, that was coined by my co-founder, Brad Feld. We're sorry that word has taken off as much as it has. But these accelerators that we operate are in 16 countries, about 50 different locations. So far, nearly 3,000 companies in the portfolio, 16 unicorns, and about 200 billion in portfolio value. So in terms of what we're excited about, we've recently finished our latest fund, and really just growing the platform, coming to more places, because we know that entrepreneurs can be successful in anywhere in the world that has a great startup community. So we're excited to bring the platform to more and more places around the world.
Great, David, thanks so much. So we'd like to divide the rest of our session into two pieces. One, I'll be asking our panelists a number of questions, and they'll of course be responding. And then of course after that, we'd like to get some questions from what is now more than 200 participants on this panel. So first, I'd like to start, Gina, with you, a two-part question. What are some of the major trends and or disruptive technologies currently shaping the industrial tech vertical? And second part of that, do you see any regional nuances?
Sure. So we broadly invest in energy, water, advanced materials, and industrial IT. So if I take a few of those sectors and think about, what's really exciting in energy, it's still electrification. I've been saying that for a long time, but it's still really hot. There's still a lot of, and we're not, I think VC is kind of slowly moving out of the passenger vehicle, at least the stage that we're in, out of passenger vehicle and more into the electrification of marine, of off-road vehicles. So there's a lot of other areas for electrification, and obviously the different charging solutions for those different types of applications. So that's clearly important. Storage, super important, right? So storage is also an area where we're very, very interested. Obviously, there are an overlap there with electrification trend. As I mentioned before, sustainable packaging. So it's really throughout the value chain. And I think this is really exciting because we have been meeting with entrepreneurs for 20 years who've had really fantastic innovations that would have addressed the plastic waste issue and brought more sustainable packaging, more of the circular economy. But we really didn't see the market moving. And it was only about 2 years ago that we saw real signs. Obviously starting here in Europe, but also now I think throughout the world, there is a real concern, and the incumbents are now embracing new technologies. And so it's going, all the way from the petrochemical guys through the specialty, the converters, through the fast-moving consumer brands guys, all the way down through the waste management. So I think to me that's really, really nice change to see, and I'm really happy for the entrepreneurs also, because now we can hopefully see some of these technologies get adopted. And on the industrial IT side, it might not sound very interesting, but process optimization is really important. And you find, all the way going through, let's say, using quantum computing for the optimization of chemical R&D processes and stuff. So there is a lot, very specific types of technologies for very specific applications, but we are still very interested in process optimization. So if I move on to the regional, I wouldn't say that there's much of a difference as far as where innovation is happening. It's typically in those regions where you have very strong academic institutes, you've got a society that places a high value on sciences and engineering for our sector. Those are quite relevant. So that you will find sufficient pockets of that in North America and in Europe and obviously in Israel, very much so, and increasingly in Asia as well. I would say, what is different is what types of pains people are feeling. So if I go back to electrification in marine is definitely a European topic right now. It's slowly going into Asia. It's going to come to the North America as well. But because of the regulation, particularly starting in Scandinavia, we are seeing a much quicker uptake of new technologies. If I think about plastic waste, obviously the waste management side is very much focused on Asia. The innovation is focused on the typical, let's say, centers of chemical industry innovation. So there are differences. I would say, us being one of the few VCs who actually have presence globally, we like to find entrepreneurs and their technologies and make them aware of the fact that there's much lower hanging fruit perhaps on the other side of the pond, and help them to find those early adopters so that they can actually accelerate the commercialization.
Terrific, thank you. Did anyone else want to chime in, or should I move to the next question? Okay. David, be great to hear from you on how the pandemic has both positively and negatively affected M&A and venture financing. And as a second part of that, your thoughts on why some of these markets appear to be somewhat immune to the pandemic.
Sure. So, we see a lot of data in and around the Techstars platform. As I mentioned, we are global investors. We're investing to accelerators in 16 countries. And, it is very early stage investing. So that's our initial lens. Usually it's a few people and a dog and an idea. They don't always have a dog even. So when we look at the data throughout the pandemic in relation to financings, although our first investment is obviously early stage, we're really looking at all the data across our thousands of companies. So that could be later stage investments as well. And in any given month, in 2019, we were seeing between 40 and 60 financings a month kick off. And in 2020, we're seeing somewhere between 40 and 70. And that's because the portfolio is growing. So from our perspective, looking at the data, you really wouldn't know there's a pandemic in terms of the activity that's occurring. From sort of even the March timeframe on through the rest of the year. It looks very similar to 2019, just adjusted for kind of growth in our portfolio. So what that tells me is that, we saw 623 discrete financings last year, 3.1 billion going into the portfolio. There's capital out there. It was being deployed even during the pandemic. Prices may have been affected. So on the negative side for entrepreneurs, positive side maybe for investors and LPs. We certainly saw some adjustment in valuation, but not as much as you would think. And in terms of volume, really stayed very much on pace globally from what we saw even the year before the pandemic started in terms of financings. When it comes to M&A, the story was a little bit different from our perspective. We saw pretty much data going to zero in the April timeframe of last year. Again, we'll see between 5 and 12 M&A transactions kicking off each month. When we look at the data, we don't look at when it closes. We look at when the activity started so that we get a sense of how the market is reacting. And in April, basically no one was doing anything. None of the acquirers were being acquisitive. They were all saying, let's wait a second. And then slowly in May and June, it started to come back, and it came back completely. So what we saw is that those corporations that are acquisitive, that have a practice around acquiring companies, really saw an opportunity and began acquiring again pretty quickly. So overall, year over year, it looks pretty similar to the year before the pandemic. Lots of activity, but with a little bit of pause sort of at the beginning of all of it. And then in our portfolio, we're just now beginning to see the impact of SPACs. I think we have 2 companies that are in a process today that haven't closed. I'm sure we're going to talk much more about SPACs, but generally the takeaway from our vantage point globally was that financing was available, it was happening, some price adjustment, and M&A took a breath, but came right back pretty quickly with deal hunting.
That's very much been our experience from the legal side, and we're usually a lagging indicator from the business perspective. So since David, you've mentioned SPACs, and certainly Adam, you mentioned it in your introductory comments. Adam, if you could let us know how what is basically a red hot SPAC market in this country, and what effect has that had on listings in Europe? And then if you could just maybe dive a little bit deeper into whether and in what countries we might see similar products available in Europe on a going forward basis.
Well, thanks, Lloyd. So absolutely, I think, I guess SPAC is just another example of how innovative the financial markets can be and adaptive in these dire times. But certainly the financial markets have not been on the lazy side during this pandemic. I mean, at the end of the day, SPACs have always been there. It's just been repackaged and revamped and now utilized for a more flamboyant listing than process or mechanism than before. In the US, we came off with a fantastic start this year in terms of the number of listing activity around SPACs, both from a business combination point of view, but also, of course, new SPACs. So most of the SPAC activity from a European perspective is still in the US. We're still seeing that many, out of the 5 discussions in Europe, 4 of them are SPACs with sponsors, European sponsors setting up SPACs in the US with a clear ambition to find European targets. So there, with the ambition there is basically that they want to bring European companies through SPACs to the US markets, which is a bit of the holy grail in terms of European companies wanting to access US investors. So that's still, a key topic in Europe. At the same time, we're seeing more and more companies contacting us that are exploring the SPAC routes, a bit like David was mentioning. So you see more and more European companies evaluating which SPAC, or rather, should they go via SPAC or the traditional IPO route to access the US market. So I think the good thing about this is that there's optionality. Companies have the option now to explore the routes of either a SPAC or an IPO. The IPO market is still very active, and although SPAC is still in the limelight a bit. On the other side, you have Europe and the rest of the world trying to figure out, should they do SPACs or not? And I think the big debate in London is whether or not, should they adopt or adapt rather the SPAC structure that they have in the US. In the UK, they have a SPAC structure which is not really entirely working. Amsterdam has picked up a lot of momentum. And the rest of Europe is kind of, there's one SPAC that has been done in Frankfurt. We just launched our SPAC structure in the Nordics, and it's creating a lot of interest. So I think a lot of the SPAC movement that was going to the US from European sponsors, they're now evaluating whether they should maybe not go into the saturated US market and, try to position themselves with their SPACs here in Europe, and really ultimately trying to help European companies access the public markets through SPACs, but through European SPACs. And I think at the end of the day, the SPAC structure has really created, an alternative to come to market. The challenge with the SPAC is that the company still has to manage the public markets. And so even though it is a lot more efficient, ultimately what you want to see is a company that's ready from a predictability point of view, from a governance point of view, from a maturity point of view, to be able to manage the public markets. Because at the end of the day, the real honeymoon is over after the first quarter. If you can't really live up to expectations and manage the expectations of the public markets after your first quarter, that's a tough starting point. So you want to make sure that your business is predictable, but at the same time, I think it's great that there is now alternatives, but it's important that the companies assess them carefully. So I think, in summary, Europe will have SPACs. You will probably see a bit more of a conservative approach than in the US, but certainly we will see a picked up momentum. We will see European companies being able to access the markets through US or European SPACs going forward.
Adam, thanks very much. Jonathan, if we could turn to you now, and also a two-part question. First, we'd like to hear how the Israeli ecosystem fared in 2020. And then the second part is, what are Samsung's focuses for 2021?
Yeah, thanks, Lloyd. Sure. I think when it comes to the activity in Israel, it's been largely a very strong story despite the COVID pandemic. Investments have really exploded. And while M&A is down a significant amount, the good news is that IPOs have also dramatically increased as well. And the way I see it is Israel's really moved from a startup nation to a scale-up nation. And allow me to unpack that or to drill into that a little bit more. For 2020, greater than $10 billion was invested in over 600 startups in Israel, and that compares to $8 billion in 2019. So, trending upwards, really good. And if we go into more detail on that concerning this move to a scale-up nation, you had 98 deals over $30 million versus 65 in 2019. But let's put that into perspective. 5 years ago, there were only 3 deals in Israel that were over $30 million. But it really gets interesting when you start talking about mega deals or companies that, are really scaling up. You had 20 mega deals over 100 million in 2020 and 18 in 2019. So a little bit of an uptick, which you always want to see. But think about it in perspective. 5 years ago, there were only just a handful, 3. The total number of unicorns actually right now in Israel is around 50. So really, years ago, a couple of years ago, there was this book, Startup Nation, about Israel, fantastic book. We want to see the sequel to that because the data is there to talk about the scale-up nation. And, when you think about the public offerings that I mentioned, it really jumped. It was close to 7 billion for the year. And just in 2019, a year before that, it was only 2 billion. But like I said, the one area of weakness that I think we all need to think about is that M&A was substantially down. Probably, no surprise, COVID had an impact on that, as we heard from David. It was just 8 billion, roughly speaking, compared to 14 billion the year before. There's a little bit of nuance there as well. The other thing that we've been seeing in the Israeli market for a couple of years now is this gap. You have your mega deals over 500 million, and then you have, over 1 billion, and then you've got a whole bunch of deals that are under 500 million, but not a whole lot of activity in between. So that's another area where I think everybody in the ecosystem needs to think about it. Second part of the question, our initiatives. So moving into 2021, as I mentioned before, we're very focused on cloud infrastructure and of course, how it relates also to the AI wave that we've seen in the last couple of years. So, as I mentioned, when it comes to cloud infrastructure, we like to think about those new compute architectures, new interconnect, and new data fabrics and networks. And what we've seen is a pattern which goes back a long time, even much, much older than our 8-year-old fund, is the good news for us in terms of our Israeli coverage is that these areas are very, very strong in the Israeli entrepreneurial community. You have fantastic engineers and you have fantastic business people all coming together to develop these awesome startups in Israel that we like to learn about and potentially can invest in. I'll also add, of course, all things AI, right? You hear that in almost every conversation. There's just, if you think about it from the perspective of the cloud infrastructure in particular, and by the way, I don't want to exclude everything out to the edge as well. We're interested, we have a network business unit. They make 5G radio boxes. So when we think about cloud and AI, it's basically all of it. It's all the way from the edge, all the way to the cloud. And, when it comes to AI, you have explosions in models. The complexity has gone up way higher than even the technical experts thought. Everything is just getting so much more complicated. And, the buck really stops with the underlying infrastructure to do all the compute, to move all the data around, and to make everything just happen magically, whether you're watching Netflix or whether you're even on the Zoom call, right? You don't want to have the latency and all these kind of issues, particularly in an environment where a lot of people are working at home. That's what our team's happy about. That's what we think about all the time. And that's what we'll continue to really throttle up on, particularly in our Israel office, where we just see a lot of fantastic entrepreneurs that can focus on these areas.
Great, thank you, Jonathan. David, if we could go back to you and you could chime in a little bit on the key indicators or metrics that you're focused on when you're evaluating a potential investment, and how, if at all, the pandemic has altered your thinking on those indicators.
Yeah, Lloyd. I know that a lot of VCs get this question, and my answer is always very different than most venture managers would give, and it's because of the nature of our system and our beliefs about the asset class. One thing we know is we don't have a crystal ball, and we can't sort of always be right with our picking. So we believe that venture is going through a change, and we're part of that, and that we're investing really early in lots of companies. And so that's our first strategy, is to make investments in really promising founders before they have significant traction, probably before they have metrics. So at that stage, in that first strategy, really it's team, maybe market progress idea behind that. But we're really focused on who are these founders? Who are the early people in the company? Again, it's usually just a handful of people. What insight do they have into the market? What special ingredients do they have that will allow them to win? And often early on, that's just team. And so that's the primary thing we look for at that true startup stage. Now, our second strategy is which of those thousands of companies do we then follow on? And for that, again, a little bit different than most investors would do it. We are, effectively big believers in people like Jack Bogle, who created Vanguard and the ability to index an entire public asset class. We believe that we just want to be invested in the strong companies that are growing and scaling, but we don't play the role of that sort of lead investor. So in those cases, we're really looking at who are the primary investors, what are they bringing to the table, and of course, how does this company compare to all the other ones that we're seeing in our broad portfolio? So pretty different answers from us. At the early stage, very much about the people. At the later stage, about their ability to attract, again, better and better team through their investors, their board, and so on over time.
Terrific, thank you. And then Adam, why don't we come back to you? And it would be great to hear what challenges and opportunities do you see for European listed companies in 2021?
Well, I think it's an interesting one. I think overall, on a global level, the IPO markets have certainly picked up. So from our perspective as an exchange, we clearly follow that very closely. I think one thing that is challenging with Europe is that we lack homogeneous equity markets. So from that perspective, you're looking at a very fragmented European picture, where you had 12 listings in Germany last year, whilst 80 in the Nordics. So ultimately, I think the ability to support companies, growth companies, technology companies in their local markets is a challenge. And I think it's driven by fundamentally many different aspects. I think one is that the equity culture in each market is very, very different. The ability to mobilize growth investors in the equity markets to support growth companies is still a challenge. Israel is picking up. We've seen a good number of interesting companies, especially in the clean tech space, list locally. But ultimately, the Holy Grail remains, and the ambition remains, to go to the US. And I think that's where Europe still struggles, is basically to really capture these late stage companies in the local markets. And especially now that the SPAC market has opened up, you're seeing that many European companies see that that is one more door that opens up the possibility to access the US markets. So again, you can see it from a negative point of view, you can see it from a positive point of view. The negative is, of course, that companies are accessing the US markets, and everybody's discussing how do you create a stronger local market, whether it's London, whether it's Zurich, whether it's Stockholm, etc. But the other aspect is that these companies are coming to market, and many of them stay local and reinvest locally. And ultimately, that creates a new layer of ecosystem, which strengthens the, from an angel investor point of view, etc. So you're seeing many more mature companies coming out of Europe. The public markets are warming up. In Stockholm, for example, we have a great listing momentum. This week we have 10 listings. and we are able to list small and medium-sized companies. And I think that's a great segue, especially for the sector that Gina was talking about, where a lot of innovation is taking place in smaller companies within clean tech, and they are very capital intensive. How do you make sure they get access to the public markets so that they can really continue their journey with credibility, but at the same time with access to the capital markets? So I think at the end of the opportunity is there, but the challenge is how do you make the European capital markets more accessible from a public market perspective? And in the US, we almost see the same challenge, because accessing the US capital markets requires size, but the SPAC component has certainly facilitated an easier way to access the markets at an earlier stage.
I just wanted to amplify something I think Adam said that was really important, is that ecosystem evolving over time. In Tel Aviv, we fund 10 companies every year, for example.
Yeah.
Those companies have mentors that are interested in angel investing. It's sort of activating the market. Of course, some of them are going to go on to do well, but it's that ecosystem growth over time that really draws out those early investors, which are critical to the ecosystem, that lead to the ability for those companies to get big and list. So I think that's a really important point.
No, I would definitely agree. I mean, we're going to see some fantastic Israeli companies this year come to market. And I think, you will definitely see a lot of reinvestment into the Israeli community from an entrepreneurship point of view. And it's no longer just capital, it's also knowledgeable capital. And many of these are second-time entrepreneurs. And they come to market with a completely different level of maturity and knowledge set, which will facilitate even more and quicker and better growth for many of the startups that we're seeing taking place right now.
Thank you both. That's incredibly interesting information, and I'm sure we all see it with lots of the companies that we work with. JC, going back to you, what factors do you see as most affecting the current exit market for startups, and how much, just to add a little spin, how much are SPACs affecting that exit market?
Yeah, Lloyd, I think, because we're, still in the pandemic here globally, of course, that's the big sort of thing on everybody's mind, particularly when it comes to valuations and exits. And, what we're seeing is that, usually you have this tension around risk, right? Buyers of a company want to minimize that, and sellers want to say, hey, there's not as much risk as you think. And I think this kind of continues, and it's in some ways amplified when it comes to the COVID pandemic here. The sellers can say things like, hey, vaccines are being rolled out, there's light at the end of the tunnel, so the risk is not as great. But of course, buyers are really worried about, new strains of the virus, or hotspots, or vaccines maybe aren't rolling out equally across the whole world. Israel's done a great job with their vaccines, so congratulations on that. That's a great achievement. So you're going to see that risk, that tension on that risk sort of amplified, and I think for quite some time here. And you're seeing things like earn-ins and burnouts, where the buyers say, if you can't hit certain milestones due to the pandemic or any other reason, that you actually have to return a portion of that. That's probably getting a little bit into the weeds of the different terms around, exits. And I'm sure your team at the law firm, the M&A team, works a lot on these kind of things. But I think that's one thing that entrepreneurs have to keep in mind, going into 2021 and maybe even into 2022, depending on how the vaccine rollouts occur around the whole world. I think when it comes to SPACs, a lot of good commentary from some of the experts here. I just see it very simply as, now entrepreneurs have more options. It's true that SPACs have actually been around for quite some time, but there are always different options for exits. Like I said before, in the case of Israel, M&A was actually down a little bit, but one of the other options for the stronger companies is go public. And the IPO figures for 2020 were, phenomenal. And then now, of course, we're seeing this other option, which is, it's a variation of, going public, but, call it a different flavor of IPO, if you will. but that's now an option as well for quite a variety of companies in different areas of technology, everything from clean tech, to cloud infrastructure or whatever the case may be.
I definitely second what JC says. I mean, at the end of the day, I really do want to make sure that we see this as an option, a credible option. But at the end of the day, each vehicle has to be assessed case by case. From that perspective, I think the ability to bring in innovative technology is clearly there's a huge appetite amongst institutional and retail investors to participate in that investment opportunity earlier, and really SPAC facilitates that. So I think it's a great innovation, but at the end of the day, you have to assess each case case by case.
That's right, Adam. Yeah, no, well said. And if I can put my investor hat back on, on one hand, SPACs can be great exit vehicles for the investments made by venture capitalists, but on the other hand, the flip side of those options is, of course, that now entrepreneurs can choose to go, say, SPAC versus taking growth capital, right? And we, I've talked to friends in the industry, and they've seen that in their portfolios. Everybody in the ecosystem, I think, has to carefully assess, these more options, but generally speaking, more options is better.
Makes sense. Thank you. Gina, what technologies or verticals do you see that you consider to be overhyped, or that your fund has decided to pass over, and forgive the pun?
That's fine. Well, I think it's very much related to the previous discussion. That it's great for us to finally see again the ability to list clean tech companies, that there's appetite, but the SPACs, for whatever reason, have absolutely fallen in love with clean tech, and it is a bit overhyped. I mean, there are definitely companies that are ready or can be made ready to be publicly listed companies in a short period of time. There's others who are very, very far away from that, and they're going to have some pretty sad quarterly earnings calls, I think, in the short term. So the SPACs are definitely impacting. Obviously, it's accelerated a lot of the exit strategies, even of our portfolio companies. It's accelerated a lot of the M&A activity. There's a lot of corporates out there who realize that they can't just sit on the sidelines and wait for the investment bankers to send them a teaser because an auction process is starting. These companies may actually go a SPAC merger route, and they may miss those opportunities. So we definitely have an acceleration. So there's a bit of a hype. I think we are concerned that there's a repeat of what happened back in 2005, 2006, when there was kind of a hype in clean tech. It attracted a lot of institutional money. It unfortunately then attracted a lot of generalist funds or funds from completely different sectors to all of a sudden get involved in funding very, let's say, sometimes very capital intensive deals that even those of us who are in industrial tech wouldn't touch with VC money. And a lot of those stories unfortunately turned out very sad, and it really caused the institutional investors to retreat from our sector. And it has been a very, very long time now that institutional investors were not interested in clean tech VC. And it would be, I think, better for us if they would come at it a little bit more pragmatically instead of just going, from boom to bust and over again. But to get to your question about the technologies, I still think that it's fantastic that these companies, as Adam was saying, have access to very large pools of capital through the SPAC process, that in some jurisdictions that we invest in, are not traditionally available or not that much available. But we as VCs cannot bet on that existing, right? We typically invest in companies that are in early commercialization, so we're not growth. I do feel sorry for the growth guys because they're all competing with the SPACs right now, but we're a bit later than David as far as the stage that we invest in, right? So we cannot invest in a company that we know very well will need to raise 100 million to get to break even, especially companies that need to raise, north of 50 million just to prove out their technology at scale, right? That is something that I really do hope the markets do not repeat that experience. I hope they'll remember how that ended up last time. And there are certain, technology areas which I think are super exciting, but they're really not VC sectors like hydrogen. And of course, there are going to be exceptions. There's going to be the capital light hydrogen deal that everybody's going to find to prove me wrong. But most of the hydrogen deals do need significant amounts of capital just to prove out the technology. So that'll be one where I doubt you'll see Emerald investing very much in hydrogen, but certainly keeping our eyes on it, because if we do find that capital light hydrogen deal, we're on it.
Thank you. So we've gotten a number of, I'm sorry.
Lloyd, I just wanted to add, I think to the clean tech space, you have another dynamic which is happening in the financial markets, the whole concept of ESG. Becoming no longer just something that was nice to have, it's becoming a reality. And I think that's, of course, relevant for all sectors, but even more so for clean tech, where it just is, right in the sweet spot. And I think that's kind of fueling it on. And it's very comparable to biotech. I think a lot of investors are kind of hoping that something good will come out of the sector. It is very high risk, high capital intensive, and the same thing goes for clean tech. So it is very much being fueled on as well by this whole shift to ESG investment, which is impacting not only public investment, but also private investments.
And even the corporates, and a lot of the corporate investors in our fund are also asking us for ESG metrics, so impact metrics as well. So finally, people are interested in what we've been doing for the past 20 years.
We're seeing more and more interest and more dollars go into impact investments and in a very, very thoughtful way. We do have a number of questions from the audience, so I'd like to share them in the order that I've received them. The first is, what opportunities do you see for venture funding and M&A in Latin America and the Baltic region? And then sort of a second part of that is, are there any other particular emerging economies that you see with strong potential in general?
Well, we own and operate the Baltic markets exchanges, and we see some fantastic companies. And I think, again, it's the ecosystem. You have companies, at the end of the day, some of the founders from Skype were from the Baltics. You now have TransferWise, also driven by the Baltics, some Baltic entrepreneurs. You have some fantastic entrepreneurs coming out of that region that are now exiting and reinvesting in the region, coupled with some very advanced regulatory drive from the governments as well to make themselves attractive and supportive of entrepreneurs. So I think we will see some fantastic companies coming out of there. The question is if they will exit in their local markets or if they will look otherwise elsewhere. And I think that's, again, some of the things that we're seeing parallel to the Israeli market as well. So, but a very interesting region to follow.
Terrific. And then the next question is about SPACs, which obviously we've touched on a bit already. But are you seeing SPACs, and the question is, interfere with M&A for portfolio companies?
Definitely. Definitely. Our companies that are going down the SPAC route are usually going, parallel routes. And I think a lot of, particularly in industrial tech, a lot of the corporates are a bit shocked by the valuation expectations and the incredible valuation expectations of some of these companies. So I think that a lot of these corporates are going to miss out on opportunities that are going to go the SPAC route. The valuations are just way too attractive in the SPACs for us right now to ignore it.
They almost always involve a B. So that's certainly what we're seeing in the deals that we're involved with. The next question relates to blockchain, and how do you see blockchain-based solutions impacting both venture financing and M&A transactions?
I can take a shot at that one.
Thank you.
I think the idea behind crypto equity is great in terms of the sort of trust and traceability. It's certainly not mainstreamed yet, but it is happening more and more. And I think it's an alternative that more and more entrepreneurs at the very early stages that we speak with are looking at and considering, rather than going to the traditional VC market. And then you sort of pair that with the fact that overall, the venture capital performance is kind of like the S&P 500 index. It's not that strong overall on average. And so some part of that market will likely be displaced by investors going direct through, crypto equities and similar. So that's really interesting. In terms of M&A, I hadn't thought much about how it would impact that other than, again, traceability and trust, which is what I think the blockchain really brings. For acquirers that might want to, understand the ownership and the historical transfers that have occurred, but I don't think it's.
David, I think you cut out.
I think my last sentence was, I don't think it's currently having a big impact. So.
Got it. Thank you. Thank you. So the next question is, where do you stand on investment and innovation in the Israeli space industry? Looking forward to NASA's plans for a lunar base and plans for a base on Mars. Anybody?
Tough one. But
we look at the Israeli market as we look at any other market. So if we find interesting technologies there, we will definitely move on them. If we don't, that's okay as well. So there are, for us, let's say, there's battery storage solutions for satellite launchers that are very hot right now. We've got a couple investments related to that. They are not Israeli companies, but they could very well be as well. So we don't necessarily take any kind of a geographic view when we're investing in or evaluating companies.
Okay, and I think we may have time for one last question, which is, why would someone do a SPAC when a reverse merger can be done, especially given the high cost or carried interest requirement really of the sponsor team associated with a SPAC?
Well, I think there's a reverse merger, yes, a reverse listing component in the SPAC there as well. But I think the advantage that the SPAC has versus a reverse merger or reverse backdoor listing, as you call it, I think is that you also get a substantial holder or owner that sort of adds value. So at the end of the day, I think if you, as a company, you should not look at the SPAC as a vehicle with assets. It's a vehicle which essentially becomes a partner in your board and really helps you drive your strategy as a public company. And I think that's where the SPAC can differentiate themselves. Typically, a reverse merger is just a shell, and really you have to do everything and create everything around it. So I think the SPAC is a reverse merger with a lot more dynamics in it, and you can also combine it with a PIPE, which is also a funding vehicle. So there's a whole dynamic there which is different. But at the end of the day, the reverse merger is still there. The SPAC is still there. Direct listings are still there. IPOs are still there. So I think at the end of the day, the financial markets have created more keys to the public markets than before. And I think it's important for each company to evaluate the pros and cons of each key and choose the door that suits them best.
I think we are just about out of time. So unless anyone has any final remarks, which I'd welcome. So I want to thank everybody thank the panelists especially for participating in today's panel. I think it was a great conversation. There's obviously more to come next year and going forward. And I want to thank all the participants for joining us, and I hope that you found it meaningful.